It's from Tony asking, if in the future you go part-time, can you reduce the policy coverage amount? I have a standard policy. My wife is principal. We're thinking about going part-time in the future. What do you think about that? How hard is it to reduce your amount if you want to?
Not at all. The insurance companies will gladly take risk off the books, right? So as you're getting older and you're getting more likely to file a claim, now you're asking them to reduce their exposure. They'll gladly do it. So uh, lowering your coverages is not a problem. Now, in this particular situation, for someone who's going part-time and lowering their coverage, it's not at all an issue to lower the coverage and increase it back up again. Now, for someone who is working full-time and calls me up and says, hey, Bob, I want to reduce my policy, you may want to concern yourself with the loss of the increase rider. So a lot of these policies have a benefit update rider, the benefit purchase rider, the benefit increase rider, and that is tied directly into your income. So they look at a percentage of your income. They look at, they take typically 60% of your income, and they look at that figure and compare it to how much coverage you have. Now, if you fall below 75% of that amount, 75% of that 60%, they will take that increase rider away from you. So sure, you could decrease that policy, but you'd better be prepared that you'll never be able to increase that policy again because you've lost the rider. Or let me rephrase that. You would be able to increase that policy again, but you'd be subject to full underwriting, right? So what that rider does is it protects your insurability. It allows you to increase the policy even if you had a chronic diagnosis on your record. And let me also answer this question a different way. If you did go part-time, yet you kept the premiums up for that policy that was more suited for your full-time income, they will pay you the full benefit if you get disabled. So you purchased a $15,000 policy as an attending when you were full-time. Now you went part-time and you're making $100,000 a year, but you continued paying for that $15,000 policy. If you get disabled, the insurance company will pay you the full benefit, regardless of the fact that you were making a lot less when you filed a claim. So decreasing, absolutely doable, easily doable. But again, you want to make sure that that decrease is not going to result into a loss of that future increase rider in case you feel that you may end up needing more coverage in the future. Obviously, if you're financially independent and you're cutting down your coverage, it's a non-issue.
The hosts of the YQA Investor Podcast are not licensed accountants, attorneys, or financial advisors. This podcast is free entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.